Hey, good evening, everyone. Hello. Got to get my Facebook up over here so I can see everything going on. All right. Wait for people to start to join us. How's everyone doing today? This evening? Hope everyone's having a great day. Getting ready to start up this new podcast, The Real Deal on Real Estate. Start waiting as people join and waiting for our guest. So again, welcome. This is our new podcast that we're starting. It's called The Real Deal on Real Estate. Looks like my man Lloyd has just joined us. So let's see here. Hey Lloyd, can you hear me?
Yep, I can hear you. Let me get my camera over a little bit.
Good. That's good. How's everything going with you?
All right, pretty good. Hold on. Let me see if I can adjust the camera. Okay, there we go.
No problem. Good to see you.
Good to see you as well.
All right. Hey, again, I just was trying to wait for some people to join us, but it looks like we're getting some viewers on there. I don't know if you can see or not, but I can see that we, have 4. So we can wait a little bit, about 2 or 3 more minutes, see if we can get some more people to join us. And I'll just go over, a little bit, whatever the body just, again, we're live on Facebook, and I'm glad that everyone can join us this evening. It's going to be exciting. We've got Lloyd Grant here with us, and we're going to have a host of guests. And we started this new podcast, The Real Deal on Real Estate. We want to give you the good, the bad, the ugly, and give it to you straight with no chaser. We want to make sure you understand all the ins and outs of real estate. So you have all the tools you need, especially in 2020, going in this new year to be successful in real estate. So with that being said, I'm very honored and I'm very excited and happy to bring my man Lloyd, the real deal. This is the real deal, like the real deal in Holyfield. Now, Lloyd has just a plethora of just successful transactions, things he's done. He's been doing this for years, but his background is Lloyd is the Divisional Vice President and Regional Manager of American Financial Network. Lloyd joined American Financial Network as the Divisional Vice President with over 15 years of mortgage experience and over 25 years overall sales experience. Lloyd has owned his own mortgage company and has been an experienced loan officer and manager for many years. Lloyd has managed, trained, and developed many loan officers and branch managers. Lloyd is an expert at credit repair. He has helped many clients become homeowners by advising them on how to increase their credit scores from 20 to 180 points. Now, you get that. He also helps you repair your credit. He's not only a loan officer, not only the divisional vice president, but he knows how to help you get from 20 to 180. And, that credit is very, very, very important. We're going to talk about that a little bit more. Lloyd is dedicated to delivering top-tier customer service. Lloyd has broken company records at 3 prior mortgage companies with productions and loan volumes and units as a loan officer and branch manager. Lloyd's clients get access to highly competitive rates and 0-point loan options that helps reduce clients out of pocket expense. And Lloyd's going to talk about that a little bit more. Lloyd and his team are even able to close loans in as little as 15 days. 15 days. You guys hear that? He can close a loan within 15 days. That is something, normally that's cash deals, you do that. But if he could do a loan within 15 days, that's phenomenal. His clients have direct access to Lloyd in-house team of lending associates, including direct access to loan underwriters. And I always say that loan underwriter is like the Grim Reaper. So, if he's got direct access to the Grim Reaper, and we'll get a little bit more into that Grim Reaper, the underwriter. Mm-hmm. But Lloyd, tell him a little bit more. I mean, what I missed or anything else that you want to add to that?
Yeah, that was pretty good. That was it in a nutshell, pretty much. To add to it, we have all types of specialty products. We could go as low as 500 credit score on FHA or VA. Those are a little bit tougher. So those are not going to close in 15 days. Those are a little bit tougher. So I got just a lot of massaging with those, but I can get them done. And then for like regular financing, with a 500 credit score, you're gonna have to put 10% down on your down payment. But once I get you to 580, then you will have to just put the normal down payment, which is 3.5%. If I could get your score up to 600, you can actually qualify for our down payment program.
Okay.
Where we take care of your whole down payment for you.
Well, that's awesome. That's good. I'm sorry, I didn't mean to cut you off.
Oh, no. So we have that. Then we also have a plethora of products for everybody. So if you're a high credit score, those are those people that are closing really fast. Like I have most of my clients, if they're over 640, I'll get them closed pretty fast. As long as we can get that appraisal back and I have all my documents that I need. I have like right hand with the underwriters. So, and that's how we're able to get the files to closing fast. I can actually process loans as well too, because I was like, I need to be able to process. So I can process, pre-underwrite, do the loans, and it's just, it gives me that autonomy to move the files and move everything pretty fast. As you can see it now, experiences that me and you have had in our files.
Oh yes, definitely. So you said a person with a credit score 580. Now I know that some people are, credit is probably at 580, and for you to be able to close a loan at 580, that's good. Now I know that a lot of people have, they see the interest rate. So say the interest rate today is 2.75. That 580 credit score, they're not going to probably be able to get that 2.75. Is that correct?
They'll probably get like probably a 0.5% to 3/4 higher. So they might be around 3.5 or something like that. But in the process of working with them, I'll actually try to get their scores up. So maybe even by the time we go to closing, they can actually qualify for the lower rate because I'll be working with them to get their credit score a little bit higher as well.
That's awesome. Okay, that's great. Yeah, I think that, from the real estate side, I cannot emphasize how important it is at the beginning of your search and looking for a home that you start with the lender, to see how much home you can afford, to see, what you need to repair, and you do credit repair. That is awesome because a lot of lenders just do loans. So for you to sit there and look at the file and say, hey, listen, I see that where your credit is, I can help you get this. You can't get the house today, but maybe another 4 or 5 months from now, we can, help you. So normally with your credit repair, doing all this, what's the process with that? And, I know sometimes they do deletions, do different things. And
no, see, I don't like with those credit repair companies out there, they'll try to say, we're going to write letters and we're going to dispute everything on your account. When you're trying to get a mortgage loan, you got to get all those disputes removed. So I streamline the process very fast. Like, okay, we're not going to do all these disputes. We're going to either have you pay those off, or we're going to look at it in a different way. We just got to get them removed. And then I'll, try to have you pay something else, try to get you to get some other maybe small little credit cards. So it's different ways that I work with the clients, because you have a lot of companies out here that makes the clients pay these $400, $500 a month, and it takes like 6 or 8 months. Mine is pretty fast. If you follow exactly what I say, we can do what is called like a rapid rescore right through our own computer, right quick through the barrels, and your score jump up pretty fast. Like I just had a client, she had a 558 and I got her to 675 in a matter of 3 weeks.
Wow.
Yeah, I said, pay this, pay that, did a rapid rescore, boom.
See, that's awesome, because like I say, a lot of clients, get disappointed. And I didn't know that you did in-house credit. It's good when you have one person, one-stop shop that can do that. Because that is crucial. And a lot of times people walk away disappointed. They talk to the lender or can't do anything for you. And for you to be able to do that and provide that service, that is excellent and awesome. So that's great. We kind of, talked about the credit score. I mean, the interest rates and all this. and you guys you're nationwide. You just don't do things in certain, I know you're local.
Nationwide.
We're in the DMV for those on the internet. We're in the district, Maryland, Washington, D.C., Maryland, and Virginia. But you're nationwide, so you can offer loan products nationwide for people.
Yes, everywhere.
Oh, that's awesome. So you do refinance as well and all that?
Refi, purchase. We do investor loans, construction of perm loans, land loans, investor loans, 203K renovation loans. So we pretty much commercial loans. We do it all. Reverse mortgages. So we have a lot of products.
Wow. And so do you guys also offer for and when I was reading the bio and everything that you do, I think you guys offer a product too for helping assisting with closing costs. So, and a lot of people get confused too. Let me just speak on this here. A lot of people get confused that have VA loans. They think, okay, no down payment. That's one thing, but there's also a closing cost.
Exactly.
So go a little bit in on that a little bit. The closing costs, the difference between the closing costs and down payment, if you could, Lloyd.
Okay, yeah. With the down payment, that's whatever the type of loan that you choose is going to have a certain down payment. So particularly with VA loan veterans, they don't have a down payment. So a lot of times veterans think that, I'm going to come to the table not having to pay anything. But in this seller's market, a lot of times you're not going to get the help from the seller. So a seller, and normally closing costs is anywhere between 3 to 5%. So that will be upon the buyer to come up with that 3 to 5%. What I've been doing with a lot of my clients, because they may not have that money, is that because I run my own branch, like I have what is called a profit and loss. So I can control my pricing and control everything. We're not a corporate mortgage company. We have like a corporate office, but we're not like corporate. Like there's a lot of differences between banks, corporate mortgage companies, and profit and loss mortgage companies. So it gives me the autonomy to actually say, okay, I'm going to structure a loan a certain way to give my client like $8,000 in closing cost help, or I can give them $15,000 in closing cost help, or whatever way to make it work for the client and it still be profitable on the lending side as well. Because my company is just not going to let me do negative loans.
Totally understand. We're not working for free, but we definitely want to help the clients as much as we can, and that's good. Good information to help, because a lot of times I get clients, especially veterans, sometimes they think that, hey, listen, VA, they told me that I don't have to put anything down. Well, no down payment. That's one thing, but closing costs, we'll try to work on these, but closing costs is normally a cost that you have to pay. So, just trying to make sure, again, we're trying to give you guys all the tools and empower you. So when you get out there, the biggest challenges that we always have with people buying or selling is lack of information or surprises. And a 3% or 3.5% closing cost could be a big surprise because, it could be $7,000, $8,000 that you didn't know. So again, that's great. One thing too, Lloyd, what is the difference between PreApproved, PreQualified and PreApproved?
PreQualified is basically when a customer calls you, say, hey, I make this amount. I got about this amount debt. And then you just qualify them based on that. But that's not accurate because you need to really look at their whole situation. A pre-approval is when you're actually looking at all of their information, W-2s, pay stubs, tax returns if they're self-employed, pay stubs, everything about their situation. Then you have to pull their credit report, and then you match up based on their income, based on all of their debt, what their true purchase power is.
Okay. Now, so one of the things I had said about earlier, you talked about the underwriter, and I say the Grim Reaper, but his process and his role. So you got pre-approved and everything, but normally, 25 days within the loan, then it goes to the underwriter, and the underwriter has that final stamp of approval.
Yes.
And, you're sitting there like, so what does he look at different that you look at?
Well, the underwriter, like you said, Grim Reaper, they have access to everything. They're almost like FBI. They can look at what you did 15 years ago. They have all these little tools at their disposal to look at everything that you've done over the last 15, 20 years. I mean, they have a fraud report thing where they look at if you own other properties that you didn't disclose to the loan officer, or you had this, or they're able to see it. So if you don't tell your loan officer what's going on, the Grim Reaper, they'll find it. They just will. It's pretty hard to get around it. So the more information you give to your loan officer, the better you'll be, and it'll be a smoother transaction. Yeah, it's just really that simple. You just need to be upfront, tell everything you can, so that way I can work it out for you.
and just to be clear, a lot of people get frustrated with the realtor, the lender, when they for buyers, they get frustrated with us because during the loan process, there's a lot of documentations, there's a lot of things requested, and they don't realize that it's a lot of times the underwriter is saying, hey, I need this document, I need this, I need that. It's not us. We've taken all the information, but they're, these documents, and I always say, listen, if they're giving you a $500,000 loan, to buy a house, they're giving you this money up front on good faith, and they got to make sure all these documents and everything, the checks and balances are there. So yeah, it's not us requesting this information.
Yeah, it's really what happens on the back end is, the lender will request things, but it's through federal guidelines. It's like Fannie Mae, Freddie Mac, and all the people on the back end that a customer never knows of, that it's their actual guidelines. The underwriter is just following their guidelines, not so much the bank's guidelines, in a sense. Right. If you understand what I'm saying. So it's all, it's a trickle down effect, pretty much. Like the underwriter say, okay, these are the guidelines for this particular loan, and this is what I need, and then that's what they ask for it. So in the process of the pre-approval, I try to streamline it to make it as smooth as possible, because I'm kind of like seeing it before it even gets to the underwriter. I kind of know what they're going to look for. I check all the guidelines before I even put it into underwriting, because I want it to be less conditions when it comes out, like approval conditions. So I want it to be as less problems as possible.
Gotcha. That makes sense, and that helps, again, the buyer. And it's good, like I say, as the process, ahead of time, then what landmines may be out there. You can prepare yourself and everything when you're trying to look to purchase a home. Another question is, what costs or fees does a buyer have to pay, out of pocket? So we know that they have the appraisal sometimes. Sometimes appraisal, a fee have to be paid out of pocket.
Yes.
Termite inspections, things like that. Any other fees that you know of that sometimes the buyer has to pay out of pocket before closing?
Normally the home inspection, that's pretty important, and that's normally the buyer is with their realtor before, when they do this contract. Of course, it's important to get a home inspection, because you never know what's going on with that house. So that's one of the fees. That's an important fee to pay. And that home inspector wants that money right there. It's normally like, I think like $400, $450.
Yeah.
Then you have your appraisal.
Yeah.
And then the termite is only normally like $50, but you can get that. So
but with the appraisal, sometimes
be straight out of pocket. Other than that,
okay. So the appraisal, you guys normally have your appraisal rolled into the closing costs?
No, they have to pay that up front.
Okay, so the appraisal, so you got the appraisal, which is normally $700-800. You got the home inspection, So these are fees, again, that preparing the buyer to make sure they know they have this money in their pocket, and the home inspection is critical, even in the seller's market. People, if you have to get it for informational purposes, make sure you get a home inspection, just to make sure, so you have a peace of mind, at least know what you're getting into, because you start peeling back that onion, boy, I tell you, be crying. That's how a lot of people.
You never know. What's behind the walls, and then you're looking at a $30,000-40,000 thing that you didn't see, and now you got to call your homeowner's insurance and hope and pray that they'll pay for it.
And that's how we, see a lot of people in the industry have what we call buyer's remorse. So, those things are, very, very.
Yeah.
It's just sad. Now, one thing I'm going to jump into is that I've got to give some people some background, a little background. Me working with Lloyd on a transaction. So we had a young guy, and this young guy was a person who was out, has his own business. And I know a lot of people on, that's listening in have their own business. And he was dealing with, a different lender at the time he had went through, and had a ratified contract. That means we have agreement between two groups. He was trying to buy the house, and they had a seller, and we had everything moving forward. 15 days in, the lender said, hey, because the way you have your business structured, we cannot get this loan done. We cannot do it. Now, this man had his family, had everybody, beautiful home. I mean, everything he wanted, he dreamed of. And I said, man, let me call Lloyd. Let me see what Lloyd can do. Lloyd came in. I tell you, this man hit a home run. He came, jumped in the deep end. I mean, didn't miss a beat. He said, okay, I see what you did. You kind of did like a Donald Trump, but hey, I can work through this and help you navigate through this. And I tell you, I mean, this young man didn't know if he could get it done, but this was a big time lender that he was dealing with. And Lloyd, like I said, jumped in the deep end and made it happen. I mean, again, Lloyd is phenomenal. He has patience. We work with some other clients of ours, and he has patience like Job. And I realize that you're a Sagittarius like me. You're born in December, so it's Sagittarius. I'm a Sagittarius too.
I'm a Capricorn, so I'm close. I'm on the cusp. I'm right there.
Well, take all that back then, man. Get out of here. Nevertheless, but Lloyd came through, and I mean, it was just, phenomenal. And even with one of our others, client, it was one of those things that he answered the phone. He answered every question. He threw his chips in there, like, hey, let me take care of this, and that was great. Everything he did. So I get back. Another question we have is, and anybody, if you guys have questions, please chime in. I'm trying to look over here on my Facebook to see if any questions. And I don't know, Lloyd, if you can see anything on Facebook. You probably are not looking at it. Yeah, but if there's questions, please jump in and chime in. I'm trying to look and see if I can see it on my computer as we go through this. Anyways, if no questions, I still, we have questions and answers. So,
hold on.
Okay.
Here we go. Okay. I don't know how I got over here.
Oh, you got two.
Yeah. I got triple monitors going on. So hold on.
Yeah.
Move this over or something.
No problem.
Hold on. Let's see. I'm going to move it over to a different screen.
Okay.
Okay. Hold on.
Okay. Yeah, I'm looking too.
Back over here. Okay, there we go.
Yeah. Hopefully there's no questions. Hopefully I'm not missing anything. But anybody has any question, this is what this form is for. So you can jump in, you can ask questions, you can, say, hey, I've got something going on. I want to try to understand. Oh, I see some comments now. Okay, here we go here. Can you explain what a 203, what is it? Can you explain what a 203 loan is, which you mentioned earlier, and is it hard to qualify for? Okay,
well, basically a 203K loan is a renovation loan. So basically you have to get with a contractor. So you may walk in a house and say the sales price is $150. But once you have like a 203 certified contractor, I have a lot of those that I work with. Then they'll go in the house. They'll tell you what it will take to fix the house. So it's not a harder pre-approval. It's just more steps to it. So they will give you a bid saying, okay, that it's going to take $100,000 to get it fixed. The way it needs to be fixed to pass a FHA inspection or conventional inspection and appraisal, so that you'll just be qualifying for $250,000 instead of $150 was the sales price. So it's not really hard. It's just a little bit extra steps. And then it's more steps after you even get the house. After you get approved on the loan side, then you have, that's when the contractors, after you get approved from us, then the contractors will go out there and do all the repairs and everything else, and they get paid accordingly on that.
Okay, that's good. That's good, especially for investors. And I know a lot of people are looking to invest, flip houses, and do different things. Looks like we got another question. Let's see what we have here. You see that one, Lloyd? Can you see it?
Is there
Is
a
there
certain
a certain
time
type,
to have to loan
or is
this
there a
loan
certain
to
time?
renovate? It's normally pretty quick. I mean, because the contractors are fast, so they'll go out and knock it out in between. I mean, depending on how severe the property is, but I haven't seen anybody go past 3 months to
Yeah,
repay. It's pretty fast.
yeah, yeah, yeah.
Yeah.
Quick question. I want to jump in. Can you explain what is the PMI and how the PMI works and how some loan products don't have PMI, like VA?
VA doesn't have the PMI.
Yeah.
It's just a VA loan. You're a veteran. They get little extra special privileges, basically.
Okay.
Um, Now with conventional, it won't have PMI if you put down 20%.
Okay.
And there's an actual, if your credit score is really high, you can do what is called lender paid MI,
Mm-hmm.
meaning that the rate may be slightly a little higher,
Mm-hmm.
but you will not have monthly mortgage insurance. So even though the rate may, let's just say, for instance, your regular rate, you may qualify with PMI, let's say it's 3%.
Mm-hmm.
If you do lender paid PMI, then the rate may jump up a little bit higher to like maybe even 3.25. But because you don't have this monthly PMI, your payment will actually be lower simply because it's like the lender is paying for it. That's why it's called lender paid PMI. So it's kind of like the lender is paying for you, but they're kind of not paying all of it because the rate is just to be a little bit higher, but your payment will be lower and you won't have PMI. But the normal way is once you have 20%, 20% of your mortgage paid off, equity versus your loan to value, basically. Like say for instance, if your house is worth 400 and now you're down to 320 on your mortgage, 320,000, then PMI won't be there.
And for folks who don't understand, PMI is principal mortgage insurance, and that is something that typically, I mean, if you don't have a VA or the way the Lloyd was explaining, it's normally added, so it's a little bit more monthly that you'll have to pay on the loan. So when you get to that 20%, does the lender pick up the phone? Does it automatically go away? How does that
No, more than likely you just need to call in and to your lender or to me.
So you need to be paying attention to it yourself as a homeowner.
Yeah, you kind of have to pay attention to what's going on in your community and watching what sales are going on, and you look at your balance. You're like, okay, I think PMI can go away now. So then you would just call your lender and say, hey, I want to get this PMI removed.
So especially a lot of times when you're looking to refinance, may be a good opportunity to do it as well. Huh?
Exactly. Yeah.
Okay.
Yeah.
Look like your man that came through. What is this? Who is this?
Me.
Speak. Could you see what he had?
Yeah. So investment property is simply what it is. It's an investment property. You're buying a house that you don't live in, and you're probably having somebody to rent from you over there. And though since there's more risk in having a property that you're not occupying, the interest rates are a little bit higher than your primary home or your second home. Because the second home, you're maybe in Florida and then you are living up this way. So you're in between both places. So that's not as riskier. But the rates is normally about 0.5% higher for investment versus your first or your second home.
And one thing, with investment properties too, also just remember when you do go to sell, it's not your primary property. So you do have to pay taxes unless you, I think, 3 months or 90 days or something buy another investment property. So just keep that in mind with that investment. That is something you will have to pay taxes on. Oh, look at here. We got Merry Christmas. Okay. Caribbeans. What? How risky would it be to purchase an investment property in the Caribbeans right now? Oh, COVID? I don't know.
That's for you, Cornell. That's the question.
Oh, yeah, that there. I mean, I know one thing with, if you're investing loans, I don't think that, a lot of U.S. lenders, do they give loans, Lloyd, for Caribbeans in different countries? I don't think so, because I had a friend
Not
looking at
really.
Jamaica.
Puerto Rico, yeah, but I don't think
Yeah.
in the Caribbean. Yeah, that would be cash.
Yeah. I had a friend that was looking in Jamaica, and he was looking, he couldn't get secure loan. They, and the interest rates are very high if you're going to use, their institution getting loans. But I think, Cynthia, you got to see where the prices are. I guarantee. I mean, if the price and if they're low, then yeah, I mean, it would be great. I mean, to get it, but for investment and with COVID and uncertainties, I mean, risk versus reward. We were down in Orlando back, I think back in May, and I mean, it seemed like they were just selling all the Airbnb properties with furniture and everything. And I talked to one of the realtors out there, and he was like, "Well, the investors, that foreign investors can't get over here, so they're just letting them go." And they were giving them good prices at that time, but everything's kind of went through the roof. But back in May, there were some decent prices. So yeah, I think just look and see if it makes sense. I mean, risk versus reward. This time it may be because they're slow with COVID. You might be able to get something that's worthwhile. So yeah, look into that. One thing too is when you're getting a loan and you're going through a loan, one thing that I'm sure that Lloyd emphasized and we all emphasize is please do not go out there and purchase a car, do anything where your credit is being pulled by somebody else. That is a red flag. Don't do it. Wait till you get the house. Lloyd, can you tell them, Lloyd?
Yeah, please don't do it. Don't buy a car because we got to add that debt we have to add that debt to your file, and that may take you out of the range to qualify. And it has happened, in this industry for so many years for so many people. So I always try to advise. I said, don't buy anything. Don't do any crazy cash deposits because we can't source your cash deposits. So don't do anything crazy. Talk to your lender before you do anything financial. A couple months prior to you trying to look for a house or while you're in that loan process, do not talk to your lender, talk to your real estate agent. Do not do anything that you think could be some harm to it.
Yeah. You definitely got to pump the brakes. You got to just wait till you get the house and then go on and do it. Now, a quick question: when you're doing a loan, debt to income, I don't know if there's a rule of thumb that you guys utilize because a lot of times, somebody says, "Hey, I'm making, say $100,000 a year. I'm bringing in, $5,000 a month. I have, my car payment. I've got, say my car payment's $1,000, $800. I got child support, 15, whatever. What can I afford? I guess, you go over there, you look. And one thing that I want to make clear too is that as realtors, we do not get your financial information. The only thing Lloyd would tell me is that, hey, you're qualified for XYZ. We don't get into, how much you make per year. That's none of our, only thing we know is that, hey, you got the interest rate. This is what you have and you're good to go. But is there like a debt to income that you guys is 30, 70, what do you guys go on that?
Well, for conventional, the max debt ratio is like 50%. So basically 50% of your income versus your debt, basically. So if you make $7,000 a month gross, then your bills with the new mortgage can't be more than $3,500 a month. So you're at 50%. With FHA, if your credit score is good enough, you can actually go up to about 56% debt ratio, like 56.99. So that's actually pretty good. And that gets people a lot of times when you only qualify for, and that's why sometimes people pick FHA loans over conventional because you get qualified for more. So say for instance, if you were looking at a house with 350 and your debt ratio is at 50%, trying conventional, then I would look at it as FHA, like, hey, you qualify for this for now. And then later on, we can get you into a conventional loan or whatever type of loan that would fit you better later.
Okay. Well, I do want to ask you some other questions before we get ready to close out on everything. If no one else has any more questions, Lloyd, you've been great. You've been, come forth with everything, all the information, and I hope people. I've learned some things from it, learned a lot, and definitely as you see Lloyd's name and number go across the screen, you guys can reach out to him anytime. But what have been some biggest challenges that you've had with buyers? As you've been, I like to give the good, the bad, the ugly of everything. The names you ain't got to disclose, but I know, every transaction is not the best. Mm-hmm. So can you give just a tidbit of the good, the bad, the ugly of things that has been challenging that
Ooh, well, as far as as far as the bad,
yeah.
It's a lot of times if you have a client that's kind of fighting you on getting this document, getting that document, getting this, because it's a process, because we ask for a lot, and that's just the way it is now. Yeah. It wasn't like that a long time ago in lending. Lending has changed. So and that's the hardest part of it, is just asking the clients for a little bit more documentation. It's a lot, because they're working, they're busy with their family, but that's when I speak to realtors, I say, please just educate your clients, let them know that I'm going to be asking for a lot of documents, simply because I don't want to. It is, like I said, it's a trickle down thing. The underwriter's going to say, we need this, social security card. We need this, we need that, we need this, almost like a blood sample. we need all of these documents. And the better you're prepared up front, the better it'll be as far as the loan transaction. But you just had clients, some clients that are just stubborn. I don't want to do this. I don't want to pay for this HOA certification, even though I'm buying a condo. I don't want to do this. I don't want to do that. So you just have that. Then you have some clients that got some rough situations where they got foreclosures, bankruptcies, deed and lose. And, I've had a couple of those, and it's some work, it's funny. I have a long-time customer. She said, Lloyd, if you ask me for one document, I will punch you in the face. I was like, I said, but you know what you came with. I said, I'm working miracles over here. She's been a long-time customer. She sends me everybody because, all the other loan officers was like, oh, no, I can't waste any time trying to help you do this and help you do that. And, because it was a lot of extra paperwork into it. It's just funny. And me and her have been friends for a long time now.
Yeah, with the CD, a lot of times I get challenged and pushed back with clients because they have a timeline to get the CD for, basically to close. You gotta the buyer has 3 days to
3 days, 3 business days. Yeah.
Yeah. Mm-hmm. Yeah. So that's not our rule. And the CD is the closure. It used to be the HUD state, but they changed it to the CD. And it's the closure. What is it? The closure. Closing disclosure. So you have to have that document so the buyer can review these things and make sure that what the lender had said up front, the promises, the numbers is all there, and that there's nothing that's really changed that's crazy. The numbers have went, wild or something, and then you're clear to close. You got 3 days to go back and forth with the lender. So it's not us that's holding you back sometimes, but that 3 days has to be there. So again, sometimes
that gets the client prepared to know what their numbers, and those aren't the final numbers,
right?
It gets them close to knowing the range of where their numbers could be, because this really gets final once the title company gets with the mortgage closer, and then they're balancing their numbers. That's when you know the real number, but it's going to be pretty close. That's what the closure disclosure is for.
Oh, I did, guys. I'm sorry. The questions may not be working on my little screen, but I do see another one from Rodatius. It looks like, what's the difference for PMI for VA? I think we talked about that a little bit earlier, Rodatius. It was more or less that the PMI is not there for VA. VA loan, you don't have PMI.
Nope.
So hopefully we answered that. Hopefully I didn't miss any other questions. Anyways, nevertheless, what is, the biggest reward, Lloyd, that you have from doing this job, doing it for over, 15 years? What's the most rewarding, thing that you get from doing,
Just my thing is helping people save money through refinances or lowering their mortgage term or whatever. It's satisfying to me to be able to help out the people with their dreams, especially for when they're purchasing their home. So like how our client, he purchased that nice big home,
Yeah.
in Virginia, and he with the kids and the
Yes.
pool.
Yes.
I was like, I feel a part of that.
Yes.
So
Yes.
that's very rewarding for me to be able to help clients that way, and then also make a little bit of money to take care
Not
of
much, not just a little bit.
just a little bit, so to help
Well,
out my family as well
definitely.
from all my hard work.
Well, you guys, if you have any more questions, please chime in now, because I don't want to take any more of this great man's time. Lloyd has been great. He's been wonderful. And if you do have additional questions, his information is there. I will send it out. I'll put it on the link how you can contact Lloyd. Like I say, Lloyd's my man. I go through Lloyd. Lloyd's been doing deals with me forever and a day. And Lloyd is just on point. I mean, like I say, the name of this podcast is Real Deal on Real Estate. He's a real deal. I mean, again, he jumps in the deep end. He's got patience like Job. He explains things. Explains things. So we had a client that wanted to explain spell every letter of the, every part of everything. And it was like, and I'm like, boy. And Lloyd just sat there and he hit it. He was like, Babe Ruth, Hank Aaron hitting home runs. Cause I was like, oh my Lord. And like I say, every client is unique. Everybody has a unique situation. And everybody may not want to be a homeowner now, but sometimes if you want to be a homeowner, the Bible says we have not if we ask not. We can't be afraid to sit there and just say, what is it? Pick up the phone and just call Lloyd. Say, hey, what do I qualify for? What do I need the steps to get there? That's the first process if you're trying to purchase a home, is reach out to a lender. So you have a lender here, his information. He's more than happy. He's got a team that'll answer. I'm telling you, Lloyd answered the phone at 10 p.m. at night. Like, what's going on? Text Lloyd, hey, no, I don't want to take, let's just pick up and answer. So again, I'm thankful for your time. I will be at the birthday bash.
Okay.
So I'm happy for you. I mean, like I say, I know you're hitting home runs with everything you do. I mean, again, I thank you for coming on. You have any closing words for the people or anything? You have the floor.
Just give me a call. Cornell will give you my info. My cell phone is there. My email address is lgrant, and that's LGGRANT at afncorp.com. That's A as in Apple, F as in Frank, N as in Nancy, Corp, CORP.com. Email me, text me, call me. I'm available. I work crazy hours in this beautiful mortgage and real estate industry.
That's true. And everybody, I will share all of his information out there for you guys. And again, reach out to Lloyd. He's great. He's wonderful. As you see his personality, he's down to earth. He's, one that can help. And he has able to close a loan within 15 days. He has in-house underwriter. That's a big thing. Again, like I said, he hits home runs all the time. So I thank everyone for coming out for the first podcast. I thank my first guest, and I'm excited to continue to do the Real Deal on Real Estate. So stay tuned for the next one. I think I'm going to have an investor on there talking about how he flips land and how he does tax liens. So hopefully next week we can get him on, and hopefully he may be listening now, and he's preparing his content. But thank you, Lloyd, again. And thank you, everyone. And we'll talk soon. All right. Have a good evening. All right. Bye-bye.
All right. Bye-bye.